Hi guys, it's your boy Henry from Millionaires FX. I wanna walk you through the trades that I took today and why I took those trades, and just a quick one. Then we're gonna talk about some things about my some things we shouldn't do as traders. There are things I want to talk about we shouldn't do as traders. But first of all, let's go through things to avoid, what to avoid as a trader. If you want to become a consistently profitable trader, there are things you have to avoid. There are things you have to avoid, and I'm going to be talking about those things right now. So right now, let me walk you through. Talk about it. Then I'm going to walk you through the trades that I took today and why I took them. So number one thing you shouldn't do as a trader: do not enter a trade in the middle. If the move already started before you, and when you come to the charts, all you have to do is to map your charts. Find out where are you supposed to have a pullback. If it's a Fibonacci or whichever strategy you use to find the retracement, wait for a retracement. Don't just try to jump in, because you might be jumping in at the peak of that impulse move, and then the trade is gonna retrace on you. The trade is gonna retrace on you, and you're gonna lose money big time. So try as much as you can not to enter a trade, to rush into a trade that is moving. Try when the trade is preparing. That's the best time to get in. When you have to know how to spot a trade that is preparing, and then that's how you know how when to get into the trade. That's how you know when to get in. So make sure you have the eyes to spot when the trade is starting, when the move is about to begin. That's when you get a good feel. That's when you can be able to get a tight stop. So try to avoid getting into a trade that is already into a move that has already begun, maybe halfway, or because most of the times it can pull back on you, and you're gonna kick you out. You're gonna lose a lot of money, and then you're gonna be mad at yourself. So try as much as you can to make sure you get a good feel. Get feel at a good price. Get feel at a good price. Very, very important. So that's number one. Number two, do not predict the market. I see some traders saying, "Oh, he's gonna buy, he's gonna buy. It's bullish, he's bullish. I'm definitely sure he's bullish." Do not predict the market. Do not predict the market. If you predict the market and you're wrong, sometimes before you realize it, it's already too late. Do you understand? Do not try to predict the market. Do not predict the market. It's a candid advice from a trader. If you are not sure, don't take the trade. Allow the market to show you its hands before you can get in. Sometimes you might think you're right, but at the end of the day, you end up being wrong. So do not predict the market. I'm going to show you a trade that I took today. Um, you can see this trade I took today on GBP USD. You can see this trade. I took this trade on GBP USD today. In fact, I got three move on GBP USD, and I lost one. Four moves and I lost one. Okay, three moves. Then I'm going to show you what happened. Now, look at this trade. When the market we got when the market got to this point, I was hoping that the market was actually going back to test this zone, because when the market took out yesterday's low, when it took out yesterday's low and took out one of the lows from that's Monday's low, I mean Tuesday's low. Okay, one of the swing points from Tuesday. The market took out one of the swing points from Tuesday, took out yesterday's low. So I was like, okay, let's see if we are going to be able to get this particular point. This is a low from last week. So I was actually hoping that, okay, we're going to be able to get this low from last week, but it didn't happen. So when the market got to this bank zone and started pulling back up, I had to take my profit. So, and then I watched the markets break back into this uh resistance turn support. So when it break this resistance zone, and then I was now looking at the market. It started going up, it started breaking structure and was going up. At this point, I had to take another buy. So I was actually targeting this high because I knew that okay, they are trying to take out all this high, all this equal high from here. So I knew they were actually trying to take out all this high, this high, this high, three highs. So I knew this high were equal highs, and they want to take him out. So I was hoping they were going to actually going to maybe retest this level before a fall. Guess what? I I took this buy, and then the market turned at this point. Now I was hoping when there was a retracement, the market got to this point, there was a retracement. I entered somewhere here, and there was a retracement somewhere here. Now I started loading it up again. I was actually adding more positions because I was actually targeting this level here, or maybe this bank zone here. So, but guess what? The market got to this point and reversed. When it reversed, started forming. I saw this M pattern, and the market started breaking down. I was so mad because I was loading it up somewhere here. I was loading it up here, here, here. So the market reversed on me, and then I was holding. I wanted to see what's going to happen. Immediately, it broke this bank zone. I had to take my losses, and I had to cut my losses. So, and then um, I didn't take profit because I wanted it to get at least this this level before I started taking profit. So now the market reversed on me. So, but what happened was that I had a bias that the market was going to go up. I was targeting this level. I said no, the market is supposed to go back and hit this level before we see a retracement. Guess what? During the news, the market started to consolidate somewhere here, and then I saw this M pattern, and then the market started breaking down. Immediately broke down, broke below this bank zone here again. I knew okay, I think we are in for a sell. I think we are in for a sell. What did I do? That was when I said, okay, assuming I had the. In fact, it took me a while to actually convince myself that no, that you're wrong. Maybe they actually look gonna go down because if you look at the big picture, if you look at the market on the 1 hour, you will see that we are in a downtrend. It's a broken down market. The market is going down. The market has been falling for days now, weeks now. I think I'm days now. Over 1 day, 2 day, 3 days, 4 days. Then a retracement, 5 days now. The market have been falling. So I knew that the higher time frame bias was we're in a downtrend, a broken down market. So I said to myself, it was hard for me to actually convince myself that okay, no, you're wrong. I think the market is going down until I saw this price action. When I saw the M pattern here, and then the market broke below the bank, so I said, no, I think I'm wrong. I had to change my bias, and then I had to take this sell, and I was able to get this nice 40 pips from the market. So do not try to predict the market. You have to try to be um, um, flexible. So when you find out that okay, the signs, when you see the signs, follow the signs, follow the price action, follow the levels. You know, don't just predict out of your own emotions. Follow price and forget about your emotion. When price says sell, sell. Forget about your emotions. That's number two. Number three, Number three, always consider the big picture. When you are confused or maybe you're trying to take a trade on the small time frame, go back and look at the big picture. There was a trade that something happened yesterday, right, on NAS 100. I show you guys this trade. This trade on NAS 100. It was this particular trade. Yeah, I remember this trade somewhere here. That was yesterday on NAS 100. So somebody said this trade said Nas is gonna buy. Nas is a buy. You see, I was able to cut these moves. I cut the sell here, and then the next day, Nas started falling down, falling down, falling down. So what happened when it got to this point? A lot of people were thinking, okay, Nas was gonna go back up. Okay, this is peak formation. It was gonna go back up, and then I said, I was a little bit confused. What's happening? I couldn't actually make up my mind on which direction it was gonna go. What I did was I had to go on the higher time frame. When I went on the higher time frame, I saw this market. that NAS 100 actually has peaked. That was peak formation locked. They have locked on the peak above this this level. They have locked the peak above. So when I saw that, okay, I think this time for this market to break down. It was about to break down. It's a breaking down market because the market have been trending for weeks now, two over 2 weeks plus, going to 3 weeks now. The market have been trending, higher highs, trending, trending, trending. So I knew. I said to myself, no, this is peak formation because they want to trap they want to trap traders above this level. They're trying to trap traders above this level. They're trying to trap retail traders above this level and then drop the market. And that was exactly what happened. So when I saw the higher time frame, I said, no, this is a peak. These people have actually locked in the peak. So I said to myself, okay, what do we do now? What do we do? What do we do right now? What we do is we're going to actually have to sell, because someone was arguing with me, say no, it's going to be a buy. I said no, it's going to be a sell. If they actually broke this higher time frame support, if they break this level, that means they're going down. They cannot break this level immediately and go back up immediately. No, because it takes a lot of momentum, a lot of momentum to break this level. And when they broke this level, I saw these three pins. I started seeing these pins, these pins. I said no, I think we're about to see the market get further broken down, and that's was exactly what happened. You can see the pins. What happened? Look at the pins. Look at the pins. So when I started seeing the rejection everywhere, so I knew, okay. And then I saw this bearish engulfer with the pin. So I said no, I think it's time for us to sell. So that was what really happened yesterday on NAS 100. And today I am really hoping that we're going to see a sell from this level. So that's it, basically. But that's not the point I'm trying to make. The point I'm trying to make is that consider the big picture. Look at the big picture, then scale it down to the smaller time frame. I know it's hard, but if you continue to practice, you're going to get better at doing it. So then the last one, avoid too many indicators on your charts. Price tells you what to do. Avoid too many indicators in your chart on your chart. It's gonna confuse you. Indicators does not tell price what to do. They are lagging. They don't tell price what to do. You have to focus on price. Most of the professional traders, most of the successful traders, they focus on price. Price action is key. Forget about so many indicators on your chart. I don't normally use indicators. I use the levels. I use price action. The only reason I have a 21 moving average on my chart is because I use it to get a tight stop loss when I'm taking my trade. I use it. It helps me to get a tight stop loss, like 2, 3, 5 pip stops. That's the reason why I use the 21 moving average. I don't use it to make my trading decisions. No, I don't, because I know that 21 moving average, the moving average is a lagging indicator. Everything you see, every indicator that is made is meant to confuse you. There's a reason why those indicators are being released, being launched out there, so that a lot of people can, go after the indicators, thinking that they have found a solution to their problem. Indicators go where price go, so you have to focus on the price. You have to focus on what price is doing. You understand? Focus on price and forget about the indicators. The indicators does not sell anything for you. You can use them as an added advantage, but don't make your trading decision based on indicators. Indicators will fail you. So focus on price action, focus on what price is doing, focus on the levels, focus on the higher time frame support and resistance level, focus on the bank zones, focus on the levels where the banks are looking at. There's a level where the banks are looking at. Those are the level you should be looking at. I use the bank zones to focus on the bank zones, because price tends to react around the bank zones. Price tends to react around the support and resistance level. So focus on the level, focus on the price, focus on the on price, especially on price. The signs price are showing. You need to learn to train your eyes, follow, trade your plan your trade, follow your strategy religiously. If you do that, trust me, it's going to help you to filter out a lot of bad signals. There's a lot of bad signals. If you focus your on the price, focus on the levels you marked up, trade your levels, you will see that you're going to have a very wonderful result. So I took some trades on gold today. You can see the trade I took on gold today. So price came out of it. This morning price started with the consolidation, and then I knew that I marked up this level because I knew that okay, from the look of things, this is a broken down market. We've been falling for days now, so I was actually looking for a sell, an opportunity to short the market because I knew on the higher time frame we are actually looking to sell the market. We're actually trading a broken down market. The market have been falling for days now, so I was actually looking for opportunity to sell the market. So I don't care. I just look for shorts because I know where the market is bearish. Almost all the market is bearish. So I was actually looking for shorts. So I marked up this level and I was waiting for price to come back to it, and price came back to it exactly during the time of the news. But then I took this trade. I opened a position. I opened a position with about 1% of my account, and then I wanted to see price give me that momentum. I took that trade. I used a sell limit, a sell stop somewhere here. So I got filled somewhere because I like to get filled at a good price. So I like to get filled near the bank zones or above the bank zones, so that I can make money before we get to the next bank zone or the next level. That's it. So I actually took the trades. I got filled somewhere here. So then I opened the position and they started. It was so sluggish. The market was so slow today. It was so slow. So I was not feeling so good. I don't like the market that is crawling slowly like that because it could actually use one candle move back up. So immediately we managed to get the bank zones. I had to close my trade. It's about 40 pips. I had to take it like that. I had to take my 40 pips and walk away. So immediately I took my profit. The market went back up immediately. It pumped up immediately, and I was so lucky because I saw the market was actually very slow. It was sluggish. I don't like to trade the market that is very very slow like that. So but I already marked up the zones. I was hoping that the market could trade up to this level. I was targeting at like 150 pips, 150 pips on this one, but the market moved back up. So what I did was I closed all my positions and then I had to let it go, because imagine it went back up to the level from where the move started from. So and then it started breaking down again. But me, I think I would just take my little profits I made from the market today and walk away. Tomorrow is another day, so no rush. um, no rush. The market paid up some money, and then I took these three trades on GBP USD today. When the market opened, we went into consolidation and we were waiting for that breakout. And when the market broke out, I took this sell and I was targeting this level because immediately the market broke out to the downside and broke this support level. I was actually hoping, okay, which level are they going to be looking at? I was actually looking at this level and they broke the level. So, okay, I said, okay, either the bank zone, if we break the bank zone, then we are looking at this level. It's a swing point from the last week. So I said, okay, we are hoping, we are looking at this level. I was hoping we could get to this level, but guess what? Immediately they got to this point, they went back up. So I closed everything with about I think about 40 pips profit, and then we went back up. I took a buy immediately we broke above this level. I took a buy somewhere here. The market got to this point and reversed, and then I saw an M pattern, and then I had to take a loss on this one because I refused to take profit. And when it pulled back, I thought it was just a retracement, and it was going to gather momentum to move back to move, you know, move up and hit my targets. But guess what? The market went into a consolidation, and then when I saw the M pattern, and then the market started breaking down, I said no. I think it was time to close my my trade. I closed all my position in a loss. Then I saw this pattern, and then when it broke below the bank zone and then pulled back into the bank zone, okay. And then I saw that pin and a bearish engulfer. I got in at this point, and then I was targeting that level I targeted earlier. So this was my initial target, but the market maker, they always have their way with things. So I was actually targeting that level, but it didn't happen. But right now, I think they are actually going there. But I actually closed my trades somewhere here with about 40 pips. I just took my profit and I walk away because the market was so sluggish today. Oh my lord, it was so boring. nothing was actually happening in the market, and it was so boring for me. So I didn't like the fact that the market was so slow today. But it's okay. Tomorrow is another day. We're back every day. We make money every day. So please, if you've not subscribed to my channel, kindly subscribe to my channel to get more updates, more educational content. You can also join our Telegram group to learn more about my strategy. You can drop me a comment, ask me any question or something you want me to talk about. I'm going to do that right away, I promise you. And trust me, I'm going to give you the best information there, first class information. You are not ever going to regret being a part of my channel or my family. I'll see you on the next one. Have a nice day, guys.